Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, December 7th. Firstly to the S&P 500, and here we see the market forming an inside day in bar chart terms. It is a day of indecision for the uptrend. Previous days trading we saw the trend change to the upside and the market break out through the top of that highlighted zone of support. Today we've travelled back to within there and we've found support down below the Tenkan-sen and the Kijun-sen indicator. We see the shadow on the bottom representing the sellers losing commitment around that area. There is potential for a change of trend. The important thing here is that technically the trend remains up. We have formation of a black body candle, so a switch in net momentum away from the buyers to the sellers. And also we've seen the buyers lose control. Now what we've seen is the market close around the midpoint level, and that suggests that neither the buyers nor the sellers have taken control. It does raise some doubt about whether the sellers are going to be strong enough to actually change the trend, but a lot will depend on how the market reacts around the Tenkan-sen indicator, roughly about 2074, and then around the Kijun-sen, roughly about 2068. They will be the important benchmarks moving forward to the downside if we do test down to those levels. If the market does breach down through there, there's a good opportunity here for the sellers to trade down to the bottom of this zone, about the 2040 level. Now if we do see the buyers return to the market, then we do have potentially strong resistance, and firstly we should be watching the top of the cloud, roughly about 2079, and then higher at that previous important resistance area at 2093. It is an area we had tested on multiple occasions in the past. We have tested up through there almost to the 2100 level and then sold off, so that's very important trading up around these levels. Moving next to our market breadth indicators, and one that we like to use is the advanced decline line and the 50-day moving average on it. And previously we saw, for the previous day's trading on that strong bull candle, we saw the advanced decline line trade just above that 50-day moving average. We haven't seen any strong follow through here today, and the advanced decline line has actually moved lower and moved back down below the 50-day moving average. We now have the market moving above the average, then down below, above, below, so a lot of indecision in this market, and that's evidenced by the test previously to 2100, the selling, the buyers coming back in to test almost to 2100 and then selling off again today. So a lot of indecision in this market. Had the market testing around that average and just back down below it, so an opportunity here for the sellers to give us a stronger bear market if they are inclined to do so. Now an important index here, or a market breadth indicator, has been the new highs, new lows, cumulative new high, new low index, and here we've seen that it has been trading down below its average for the past couple of weeks, and whilst the market was rallying about a week or so ago, the cumulative new high, new low index hadn't really recovered, and the prior day's trading with the bullishness coming in, it wasn't reflected in the new highs, new lows, so it wasn't broadly supported, and here we've seen it come off again today and trading down below that lower band, suggesting that there is some weakness and potential weakness in the index over the next day or two tomorrow. Next to our percentage of stocks that are above or below their respective moving averages, and the first is the short term, the 5-day moving average, and the percentage of stocks has fallen, and rather surprising. There was a good opportunity for the sellers there, but they have failed to follow through, and they have fallen below their average. They are now at 43%, 44%, and it suggests that the market is now in danger of forming a downtrend. Also the medium term, the 20-day percentage is down to 51%, very close to its moving average and in danger of suggesting that we could see a short-term bear market. Also the percentage of stocks above their 50-day moving average continues to fall. It has been below its average for the past 4 or 5 days, and has suggested that there is some weakness in this market, and the percentage above the 200-day moving average has also fallen to 48%, that in this indicator. Looking to our composite Ichimoku market sentiment indicators, and firstly the top subchart here, we're looking to the percentage of stocks that are above the Tenkan-sen, and that has fallen down to 46.988%. It is suggesting that we may be seeing the beginning of a short-term bear market. It is lower than yesterday, so let's be on the lookout. Let's look for confirmation of a candle with a lower high and a lower low, but also remembering the strong support at the Tenkan-sen and Kijun-sen on the S&P 500 chart. Also, the percentage of stocks above the Kijun-sen has fallen. We're just at 50%. It is just indicating a bullish market, but certainly looking very weak. The percentage of stocks above the Ichimoku cloud has fallen. It's at 45% and is looking weak. And the percentage of stocks below the cloud has risen, and it's at 28%. So all of these indicators, our composite indicators with the percentage of stocks above their respective or below their respective Ichimoku indicators, are suggesting that we could see a change of trend in the first term time frame, but looking for confirmation obviously. Next to the Dow Jones Industrials Average, and a very similar type of candle here to the one that we saw for the S&P 500, a black body candle, the buyers losing control of the market to neither party. This candle has closed mid-range, suggesting that neither the buyers nor the sellers closed with control. Importantly, the longer shadow on the bottom representing the sellers losing commitment, firstly down below the bottom of this highlighted zone of support, also just down below the Tenkan-sen, and suggesting that we may not see the change of trend. It all depends on how the market reacts around these levels of support, and the levels of support here are multiple. Firstly, with the Ichimoku indicators, the Tenkan-sen around 17,659 roughly, then the Kijun-sen around 17,592, and then a couple of levels based on peaks and troughs at 17,603 and 17,536. There is an opportunity here for the sellers to change the trend, but they will need to be quite strong to do so. Next to the NASDAQ 100, and similar type of trading here, but a slightly smaller black body here, so the amount of net momentum to the downside is slightly less. But this really, it's very similar, where the buyers have lost control of the market, with the sellers failing to take control, setting the market up for a potential change of trend to the downside, but support coming in down below this 4696 level. The market almost testing down to 4659, but not trading to the Tenkan-sen, as we saw with the S&P and the Dow. They both traded through the Tenkan-sen and found support below there, so we haven't tested the Tenkan-sen here, and then representing that the NASDAQ is just slightly stronger in that short-term time frame. There is an opportunity here for the buyers to come back into the market, but we're not seeing strength from the buyers. We have seen a minor gain in strength from the sellers. And to the Russell 2000, and this is where we've seen the selling for the day. Very stronger negative market here, trading down, a downtrend in place, lower high, lower low, much larger black body candle, and a much smaller shadow, a very small shadow on the bottom here. This suggests that the sellers have taken strong control of this market away from the buyers from the previous day's trading, whereas with the other indices, neither party had control at the close, and this suggests that there is good, strong potential for further downside. Now, with this being a broader market than all of those that we've looked at, this is why we're seeing the negativity reflected in the market breadth indicators and in some of the market sentiment indicators. It's reflecting that the overall market has been selling off, but we're not seeing that reflected in those higher cap stocks and the narrower cap stocks like the NASDAQ 100, which more so represents the technology sector. Also the Dow representing just 30 stocks. So the question here is, will the Russell 2000 be leading the other markets down? And there is a possibility of that occurring. With the market trading in a bearish manner down through 1167, that area failing to hold a support whereas it was previous resistance, that suggests that we certainly could see the market test down to lower levels, and we will be watching down around the cloud and around the 1147 level to hold a support if we do trade down through that area. If we do see the market attempt to rally, watching 1167, but then also the Kijun-sen trading at 1172, 1173 to potentially hold as resistance if we do see the buyers come back into this market through and a close up above this previous swing high. Moving next to our sector ETFs, and here we see the strongest sector, the technology sector, forming a small black body candle. The market attempting to break out through the top of the bands, but lack of follow through doesn't confirm the strong bullish bias in the medium term time frame yet. There is an opportunity here. The market has failed to close back within the bands, with the upper band holding as support. But if we look at the relative strength comparative, above 100%, moving higher, accelerating away from 100%, as is the relative strength of the momentum of relative strength on the right hand side here, and suggesting that this certainly is the strongest sector on the daily charts. Consumer staples is also in a strong quadrant now. It's shifted into the leading quadrant away from the improving quadrant, where we've seen the relative strength comparative now move above 100%, so outperforming the overall equities market. Momentum of relative strength has been trending up quite strongly above 100% for some time, as we saw improvement in this sector. The formation of a spinning top type candle above the Ichimoku cloud suggests that there is some indecision in this market and we could see a change of trend, but looking to support at the Tenkan-sen around 49.94 or at the upper band around 49.96 to hold as strong support. We are trading above each of the Ichimoku indicators, just supported by the Chica span now, and suggesting that if we don't see a change of trend tomorrow, if the buyers do return into this market, we could see a test up to higher levels and a continuation of the outperformance that we've seen recently. And obviously the lagging quadrant here is the energy sector. With oil selling off, it does suggest that there is a lack of strength here. The sector is strongly underperforming the overall market, and now breaking out down below the Ichimoku cloud on the daily charts, has been trading below the bands, and we have a very strong negative tone in the medium term time frame. We had the bearish breakout, strong bearish follow through confirming. Relative strength comparative has been below 100% and is accelerating to the downside, and its momentum is below 100% and accelerating down. Next to some stocks, and Activision ATVI is one that we've been following closely, and it still is trading up above each of the Ichimoku indicators, reflecting a very strong market here. Also still up above the bands, and we haven't seen any strong selling coming into the stock today. There was a switch in net momentum away from the buyers to the sellers with formation of a small black body candle. This suggests that there is potential for a change of trend, but we should be watching to key levels for support. Firstly at the Tenkan-sen 37.77, and above that at the top of the bands at 38.22. In terms of relative strength, are still up above 100% on both at the relative strength comparative and its momentum. Those indicators, however, or the momentum of relative strength has just started to point down, reflecting that its momentum is not as strong as it was previously, and we could see that relative strength roll over, but it hasn't done so yet. But there is an indication that we could see that start. Looking to VeriSign, which has been a strong stock in the recent past, VRSN, and it continues to outperform the overall market, trading well up above 100%. The relative strength comparative is up above its upper bands and pointing up quite sharply. Momentum of relative strength is above 100%, but is starting to come off, so we may see a weakening in that relative strength comparative. We have formation of an indecisive spinning top type candle, potential bearish harami pattern, and looking to strong support to come in at the Tenkan-sen, trading at $90.75 or at 91.17 above there on the bands if we do see a change of trend occur.